Good evening. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 16th of April. All right, my disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, in my post yesterday, I was saying I was ideally looking for a bit more downside, and this morning, in the pre-market video, I was saying that ideally we'd go down a bit more. We'd make the targets on the 15-minute sell signals on SPX, on Qs and Dia, and ideally we'd come back and test the weekly pivot on ES, and we did that, obviously with some help from the Fed. So I'm liking this, and this is improving our odds of actually getting some workable trend lines. So this is good news. Could go down a bit more. Ideally, I was suggesting that maybe if it dropped just another 100 handles from here, that would work very well on the SPX chart. But this looks like a bullish consolidation so far. We could head straight up, barring possible news. Obviously, we're still getting trickles of news. Trump increased the tariffs on the Chinese by another 100%, which I think the Chinese have said they'd put theirs up to 120, and they were leaving it there because anything more than that was just meaningless. So obviously Trump wasn't listening to that and upped it again. But I mean, I think the Chinese were making the point that they're at the stage where basically there's no trade happening anyway. It's just numbers after that, and they've got a point. So Trump went and did it anyway. I doubt that's going to have much impact. China did do something which probably will have some impact. Or at least it's going to hurt. They cancelled about $40 billion worth of Boeing orders. And that is going to cause some pain in all probability. And I suspect those orders, regardless of what happens now, won't be coming back. We'll see. All right, NQ. Again, retrace, again, test of the week to pivot. Again, looks promising. We don't have any 60-minute buy signals, but we're now at the stage where we can start generating some if we do go down a little more. RTY, less of a decline and less again on Dia, although again we are testing the daily middle band, the week to pivot as support. I'm liking this. Could go a bit lower, could go up from here, but tomorrow is the day, barring a big news. I'm not expecting to see anything particularly exciting happen tomorrow. It's the day before the holiday, and probably, unless we get big news, obviously big news is always a risk at the moment. But unless we get big news, I'm not really expecting to see much on Monday, and that'll get us almost 2 weeks of rally. We may get more than that, and I'm hoping for another leg up and some decent patterns, but we will see. Obviously, this is all very subject to news. Trump is talking about more tariffs every day. He's talking about, he hasn't implemented them yet, but he's talking about more tariffs on pharmaceuticals and various other things, electronics. We'll see how it goes. But I think this is a fragile rally. If he starts putting on significant extra tariffs, it's probably going to fail. DAX saw a bit of a retracement here too. ESTX as well. Looks like a bullish consolidation, and that's probably because it is. Okay, looking at the bigger picture charts on SPX, we made the 15-minute sell signal target. We did the same on the Qs, and we did the same on Dia. That's good. Still looking at these megaphones and the resistance trend lines above. They're not likely to get hit at the same time. And to be honest, these are more short-term type patterns rather than longer-term patterns, just because of the speed at which these two trend lines are separating. So, but I am watching these to see if we get a reversal at one, possible target open at the other. But I think if we see a significant fail here, we're either going to retest the lows, find support there, and we've got a potential level bottom, or it's going to fail hard, and it may well fail hard. I'm still sorry; it's taking me longer to do these bonds posts, which I'm going to split the bonds part into two. I'm going to definitely get the first one out tomorrow. I'm going to try and get the second one out on Easter Friday, and the third one on the US currency as the reserve currency status over the weekend. They're quite complex posts. They've taken a while to put together, but I think you'll appreciate them when they're through, and the next one will be through tomorrow. Okay, after we've seen a move up, I'm looking at tests of the daily middle band, and possibly higher than that. We've got declining resistance. This rally could go higher. It's already come up quite a long way, and I would say on SPX, we did actually get to the 50% retracement. It doesn't necessarily need to go much higher. I'd like to see it go higher. But obviously we're very subject to news, and we'll see how that goes. I have been watching the news today. There are quite a lot of there's an awful lot of people talking about how this is all going to expand trade. That's really unlikely. I mean, I think Trump's made it pretty clear that we've got 10% is minimum is here to stay, and at that stage, I mean, the reality is that's going to affect trade and it's going to reduce it. There's also going to be a lot of trade partners who are just looking elsewhere to increase, not really looking at increasing any business with the US and just looking to place things elsewhere, not least with Mexico and Canada, both of them making very, very serious efforts to reduce their dependence on the US. One way or another, this is going to reduce trade quite a lot. It may be that the tariffs don't end up being that bad, but whatever they are, if they're over 10%, they're still quite a lot, and people will be looking for other partners to work with, and that's not going to be great. And also, the more successful they are at that, the more then I think a lot of these, I think the EU, certainly China, they're not going to allow tariffs to go unanswered. Smaller players might, but really only until they have replaced the US. This is going to have a dampening effect on trade and growth, and it's not going to be good for prices. All right, looking at DAX. Nice rally. If it goes higher, I'll be looking for a test of the daily middle band, and exactly the same on the Nikkei. Okay, let's have a look at the US dollar. Now, DX, we're coming back in. This was looking like a bear flag or a triangle forming. Obvious setup is a retest of this low here. I've got a setup here where we could see a larger rally. Don't know if it's going to happen. And I did have positive divergence on the daily chart, which we've lost. But I am wondering if we might see a decent rally here. And certainly, I think, while I'm thinking that we might see some precipitous declines in US dollar and ZB, and I've been going through these in this current series, and I've already done the dollar ones, and the ZB pattern setup is going to be tomorrow. And while I'm thinking we may see some very precipitous declines on both of these this year, I think as long as this rally is happening, they're both probably reasonably secure. And if you look on ZB, we had this big decline, obviously, as people were countries were starting to sell off their treasuries. And then there was the tariffs pause, and we are consolidating. I think the next move is likely to be down. We will see how that goes. Okay, then, let's have a look at the bigger picture charts on US dollar. Okay, US dollar. I am wondering about a retest this low, possible little double bottom that could give us more positive divergence on the daily chart again, but we don't have any right now. That could set up a bit of a rally here. I'd quite like to see that. It's just as I would like to see more of a rally on bonds as well. I was noting that when we were turning last week, that we had an RSI 14 sell signal fixing on the hourly chart on TNX. That has fixed, hasn't made target yet, and I'm liking some more downside on bond yields and upside on bonds before it likely turns back. What I would say, though, is the bigger picture is not looking encouraging. This was a very nice head and shoulders. It broke down and it failed on that move. That's got a target back up at a retest of the highs on the bigger picture. Really, I'm looking for this being a bullish consolidation and to result in a retest of these highs at 49.97. Now, I'm going to be showing the bigger picture charts. I'll just give you a quick preview of the ones I've been looking at. And this is the TYX chart, which is the 30 year yield, and obviously TNX is the 10-year yield. 30-year yield, do we have a nice looking IHS forming? It's really not bad. If this was to break up and make target, then this would have a target basically at 30-year interest rates at 9.6%. Now that might sound wild, but this was a huge secular bull market in bonds and bear market in bond yields, and this is a secular bull market in bond yields and bear market in bonds. I'm going to be looking through the numbers on this tomorrow, but I mean, really, the last big bear market, the first big bear market in the 20th century was basically ran from 1900 to 1920. That was 20 years. And I think the next one ran from 1946 to 1982. So that was 36 years. These things last a while. They go a long way. And really, within the context of that, this would be a 61.8% retracement of this huge secular bull market in bonds and bear market in bond yields. It's not unreasonable. I mean, it's out of the experience of the current generation, but in terms of the longer term, not unreasonable. And I think the danger is with bonds because at the moment Trump's simultaneously basically an economic war with so many countries. A lot of those countries are holding an awful lot of US treasuries, and why do they need to hold on to them? Not because they're feeling particularly friendly towards the US at the moment. I mean, your friends don't dump bonds on you just because, they can, and they're thinking if they get out first, then they may avoid some pain later. But people who you're not treating as your friends, well, they can do that. So I'll be talking about that in the post. But this is the basic setup here. Possible IHS on TYX, possible IHS on TNX in the context of an overall secular bull market on yields on both and a bear market in bonds on both, which historically should last at least another 15 years. We'll see where they go, but certainly with the amount of bonds that are outstanding, and obviously there are things that could be done. For instance, I mean, if foreigners dumped all of their $8.5 trillion worth of US treasuries, potentially the Fed could buy them all. But hard to know what impact that would have, because in effect you're then in the range of just printing money to cover your debts. And at that stage, well, things can get a little hairy. And certainly that didn't end well for the Germans in the 1920s. Anyway, so let's have a look. Let's have a look at the CL chart. Now, CL, we've got an IHS which is broken up. And I don't know if this is going to make target. I have my doubts, but the target for what it is worth is in the 70.7 area. And at the moment, I'm not seeing anything compelling saying it isn't going to make that target. On NG, I've got a nice looking support trend line here. We've got a potential level bottom. We've now got a possible weak 60-minute buy signal brewing. I'm thinking this could see a decent rally. Obvious first target would be a test of this declining resistance in the 3.8 area. And if it can get over it, then maybe the upside scenario is on the table. I have some doubts about that, and I was talking about that on the pre-market video this morning. Obviously, natural gas is, in the event the economy is going to a slowdown, and I think that's very likely, then that's going to affect energy demand, both oil and gas. And it affects copper, it affects lumber, all of these things get affected. It doesn't affect, okay, well, actually, let's have a look at the bigger picture charts on these two first. On WTIC, we've got possible breakdown. I was expecting to see this rally of this retest of 63.57. I'm wondering if that's turning into resistance at the moment. So watching that with interest. Even if we see a rally up to 71, that doesn't mean this isn't a breakdown. And I'm thinking with the overall economic outlook at the moment, this may well be a breakdown. NG, we've got a little IHS here, which has got a target in the 3 area. We haven't made that yet, but we would need to break my trend line on the 60-minute to get there. And that's obviously it just trickled along for another couple of weeks. Watching that with interest here, I think this is quite important, really, for the bigger picture. The bigger picture scenario is that we've broken up with a target in the 5.575 to 6.25 area. That could be failing on basically, the downturn in the economic outlook. We will see. It's a really nice pattern, but that doesn't mean it's got to make target. Even though it's a lovely Fibonacci target and so on. It may be that this is just going to get killed by a slowdown in the economy. Now, one thing I'm going to be talking about again is I'm talking about if the US becomes, if the US is going to be less of a big factor in trade going forward. And it looks like that is the intention, and really a 10% tariff is a statement that that's the intention. So if that's the case, then, we used to have, back in 1970, the US dollar was, I think, 85% of all, international trade transactions. And now it's down to about 57%. It wouldn't be hard to see that drop to 30. Other assets would benefit. Gold would be one of them. Bitcoin and other crypto could well be another. And there are other reserve currencies which are used much less widely, but significantly. Yen, the euro, pretty sizably. The British pound. All of these could basically take a larger share, while the US dollar took a smaller share. Because if the US is going to be a smaller part of the international trade at the moment, and again, if you go back to 1970, most of the countries, most of America's trading partners, the US would have been its largest trading partner. And now, really, the only two that where the US is their largest trading partner is Canada and Mexico, and they're trying to change that as fast as they possibly can. Both of them are making a lot of efforts to cast their net wider, trade more with other countries, looking more to Europe, and actually the rest of the world already. Their largest trading partner tends to be either Europe or China. We'll see, but obviously, if the US is taking a back seat on trade and becoming more isolationist and protectionist, then the question is, why would the US dollar still be the currency of choice? And there are obviously other issues on treasuries which we'll be going through as well, mainly about the sustainability of the steady rise and increasing rise in the US national debt, and what this says about the long-term safety of holding US treasuries as an asset. Anyway, look for that in the post. On GC, we're going higher, and I think this will go a lot higher. SI, nice progress here. Still a little break of this very steep support trend line. Not reading too much into that. I'm not seeing much reason for this not to go higher. But I think in the next flight to safety, if bonds are not benefiting, and I'm thinking they may well not be, then I'm thinking gold and silver likely will. HG won't. This is just too industrial. So I think this may well be topping out here, watching out for that. But I think bigger picture, copper is likely to be heading down. Okay, looking at the currencies, not a lot to report, but let's have a look at the bigger picture on metals first. Right, gold. Nothing really suggesting that we're reaching any kind of a high. We're going through here. I mean, I'm thinking if this is going to become take a bigger position as a currency, basically a quasi currency that gets held along with other precious metals, maybe, then I'm thinking this could go a lot higher. I'm not seeing anything compelling saying it's about to turn. Divergence where it is happening on the weekly chart is being lost. This could run a lot further in my view. On silver is more of an industrial metal, but again, it's got potential legs up to 38 here and maybe higher. But the obvious trendline resistance I've got up here is at 38 and change. I'd quite like to see it go up there. No divergence on the daily chart. On palladium and platinum. I was talking about these this morning as well. These are potential beneficiaries just because they are heavy and valuable. They have a price which is pretty sizable, in the thousands per ounce. In terms of the kilos, over 100 grand a kilo. It's the fact is, these things can start getting used as reserves, and may well be if the dollar is going to be reducing in value and going to be less important as a reserve currency. These things, platinum and palladium, could both be big beneficiaries, just because they're very valuable in terms of their weight. We'll see how that goes, but I'm thinking this could shine a light on all the precious metals and help them do a lot better. On copper on the bigger picture, I've got a double top here. I was warning that we may well be making a high when we made this high here, and right now it's looking like we're trying to break down from this double top with a target, which seems unfeasibly low to me. And this would actually have a target at about the 2.4 area. But we will see how it goes. I mean, it depends how sharp the drop in economic activity is. And generally speaking, I wouldn't really look for a target which is below the start of the previous trend, which was at 3.135. But I'm thinking we may well be seeing 3.135 in the next few months. On GDX, I think we've still got a weak RSI 14 sell signals open on GDX and GDXJ. We're pretty close to that failing on GDX, and it's already failed on GDXJ. These can go considerably higher. I am planning to work up weekly and monthly charts on these, and I'm working through those, and I've mainly been concentrating on the soft commodities lately because stock charts has been removing all of my futures daily charts, i.e. on the front month futures. I was looking at went another 3 went today, and actually of the 30 that I cover, I've now only got ES, which is stock charts is still doing, which is really annoying. But I'll extend the other charts I'm doing on them. It's only minor irritant, really. I still get to do them on the hourly chart. It's just annoying. So on the 60-minute charts, not much sign of a turn either. I'm liking precious metals higher. It's I think they could potentially go an awful lot higher, and I'm not seeing anything at the moment suggesting that we're going to see a significant turn. All right, let's have a look at the commodities. KC has broken up with an IHS with a target in the 398 area, with possible resistance at this trend line here, which is in about the 389 area. So with 398 and 389. So we'll see how that goes. Obviously on the way we've got the monthly pivot at 383 as well. SB, this could well be looking at a big breakdown. More to say about this on the daily chart. Nice looking double bottom here on cocoa, could deliver. Sustained break up over 9,500. Would have a target up at about the 11,300 area, I think. Wheat still looks like a bear flag forming. Corn, broken up from a double bottom, pretty decent one actually, and it's got a target in about the 514 area. Looking at soy, I'm very skeptical about this rally. Half of American soy goes to China, and at the moment none of that is going to China. So I'm wondering why this has rallied so much, and I'm skeptical about it staying here long. That said, no current negative divergence and no current obvious topping pattern. So far, this looks like a bull flag for me. On CT, keeping an open mind, wondering about a move down. More to say about this on the daily chart again. Lumber, nice looking double bottom, very skeptical about this delivering. Live cattle, we had a double top that broke down. Now we've got an IHS that's broken up. Basically, I'm looking for a retest this high here in about the 208 area. Looking at live cattle, nice move up over the monthly pivot. Not seeing much reason for it to turn around. No negative divergence. Looking for the next resistance just under 100. We'll see how that goes. All right, looking at the bigger picture on commodities, coffee. On the daily chart, this looks like a bull flag, which is looking for a move up to 3.85 and may well break up from the flag with a target in the 4.41 area. Bigger picture, we are really in rarefied territory here. And I am thinking if we do retest this high, it may well be the second high of a double top. Sugar, on the bigger picture, this is a possible head and shoulders, which started breaking down today. It doesn't absolutely have to be. This could be a double bottom as well. But I am concerned about a potential large decline on this head and shoulder pattern. We will see. Looking at cocoa, keeping an open mind, really seeing both sides on this. We don't really have any divergence at the moment. Pattern setup is suggesting that we might see a move towards the 92.50 area. Looking at wheat is not overvalued by traditional standards at the moment, but I'm really, at the moment, this is a chart which is suggesting a move lower and maybe a retest of this low here at 495.50. Looking at corn, not overvalued by historical standards. Seeing a nice little rally here. If we can go high enough, I've got possible trendline resistance up here in about the 520 area. Looking at soy, soybean futures chart was lost today, so I've just done the weekly and the daily charts. On the daily chart, this looks like a flag forming. Next obvious target within the flag would actually be this target down here, down at this trend line in the 962 area. This looks like very much a bear flag. It looks like a bear flag within this overall pattern, and within this overall pattern, the resistance trend line would be the obvious next target, and I've currently got that at 1100. But I think this looks like a bear flag. If this continues forming for another month or two, we could actually hit this trend line here within the bear flag, which would probably be the ideal way of doing that. But that would involve obviously a lot of sideways action. Looking at cotton, not really seeing a lot on this. I'm going to see if I can get something more out of the weekly chart, but the daily is not a lot of use, and the monthly is not particularly illuminating either. I am seeing obviously some chance of this going down, and I would note that obviously a lot of countries which are making a lot of textiles are getting big tariffs as well. This may reduce sales, and that could reduce cotton. Okay, lumber, nice looking little double bottom. If that doesn't work out, and I'm leaning towards it not working out, then I think I've got a double top target range down here in the 510 to 520 area. Quite a lot of support in this area, so I'm leaning towards seeing that. But I'm watching the current double bottom, and possibly it will deliver. We do have a possible, I haven't marked it in, we've got a little bit of lowish quality divergence on the daily RSI, so we'll see how that goes. All right, great. We shall see. All right, brilliant. In that case, I think that's a wrap, and I'll catch you guys again on Sunday.